Nick, can you make a video on the Snowflake IPO? Is Snowflake stock a buy? Are you going to be buying Snowflake stock? Is it a good investment? Guys, these are the questions I'm going to answer in today's video. So if you are interested in the new IPO that's going to be debuting on Wednesday, Snowflake, then make sure to stick around for this whole video because I'm going to share my thoughts on this, and I'm going to actually share with you an alternative strategy to really invest into this stock indirectly, which you may not have thought of before. But anyways, if you appreciate me covering this video, highly request a subscriber video. Just remember to smash that like button down below and subscribe to join our growing community. Anyways, let's get into it. What is Snowflake? What does this company really do? So if you go to their website to learn about the business, this is what you're greeted with. Snowflake is a cloud data platform. So right away, you may be excited because this is a cloud-based company built for the cloud, which is an industry where investors have really paid close attention to recently. What Snowflake does, as seen on the screen here, is that they take the complexity of all the data an organization has, from database information to third-party information to Internet of Things information, and they use that data to provide useful analytics for the company, like real-time analysis, data monetization, and much more. Because the company is all cloud-based, it's easily scalable, easily able to increase complexity in terms of processing power if required, and it also integrates with the three most popular cloud-based platforms, AWS, GCP, and Azure. Now, Snowflake claims their architecture is unique, and that's what differentiates them from the competition. And they have things like centralized storage, multi-cluster compute, so that you're able to run multiple workloads at the same time without sacrificing performance and speed, cloud services to automate tasks, and then, as we mentioned at the bottom here, it integrates with your favorite cloud provider, which most businesses choose to use. Now, that was an extremely quick high-level overview of Snowflake. And I'll tell you this, based on the companies that I typically cover on the channel, this is one of the more complex businesses. It takes some time to get your head wrapped around what they actually do, the value that they actually provide, and the companies that they actually service. So if you believe this quick summary that I went through was kind of over your head, didn't really grasp it, then maybe this is not really a stock for you to invest in. There's so many other stocks out there, guys. You don't have to force any investment out there. But just keep in mind, regardless, this is a complex business, so you're going to have to spend some time to truly understand the interworking details of how they operate. Also, this reminds me of a similar business we covered recently, Fastly, which was another pretty complex business in my opinion. So although these cloud stocks are all the rage these days and they have tons of hype around them, it does not classify them as a good investment directly, because if you don't understand a business, that right away is not a good investment for you. But anyways, moving on, let's say you took the time to understand this business. You want to continue on with this video to see what I think about this stock. The question that I asked myself here is, what is getting investors so excited about this IPO? Well, first we can see the growth this company is seeing is astronomical. Q2 year over year grew by 121%, and they have over 3,100 customers, of which 56 are over $1 million customers, and they have a net retention of 158%. Now, the company did see a loss in 2019 of nearly $350 million, so it's still not a profitable business yet. But hey, investors care about one main thing here, and that is growth. Very strong momentum and growth can be seen here with Snowflake, with no signs of slowing down at all. And being a cloud-based company equips it well for the world that we're in today, where cloud is top of mind and what businesses want to move to. Now, the other thing that's really exciting investors here, especially retail investors, is the headlines that I've seen recently with two large name businesses that have invested in this company. Berkshire Hathaway and Salesforce are two businesses that are backing this company, and that's big. Now, from the headlines, you're probably going to see them say that Warren Buffett is the one buying this because, you know, he is the face of Berkshire. But in my opinion, Buffett was probably not the one involved with this deal, and he has admitted in the past he doesn't really understand tech stocks, let alone complex cloud-based software stocks. So I think it's someone else at Berkshire behind this move. But the more exciting part is Salesforce. They are a successful cloud company, so to see them back Snowflake here is quite significant and instills confidence that maybe they're poised for big things in the future. Who knows, maybe Salesforce actually wanted to buy out Snowflake, but their valuation was just too rich, so they chose to invest in them instead. But either way, that gives a lot of confidence, because if a business like Salesforce, which is one of the most successful cloud-based companies out there, is backing this company, they definitely earn some credibility points. So now let's look at the details for both of these businesses investing in Snowflake here. And things have changed since the initial reports. So the IPO price for Snowflake was initially set around the $75 to $85 range, giving it a valuation of $21 billion. Using this valuation, both Salesforce and Berkshire would each buy around $250 million worth of shares at the IPO price, which would be around 3.125 million Class A shares. Berkshire, however, took it a step further, and they agreed to purchase another 4 million shares from a stockholder at the IPO price in a secondary transaction that will close with the main offering. So clearly between these two companies, Berkshire and Salesforce, Berkshire seems to be the more optimistic one. Berkshire seems to be the one that's actually putting in a lot more money here in Snowflake. And Berkshire has an incredible reputation of investing in very successful businesses and seeing that very early on before they really become those big successful businesses. So once again, this is definitely something to take note of as a potential investor in this IPO. However, because of all this excitement, because of Berkshire and Salesforce investing in this company, there has been an incredible amount of attention on this Snowflake IPO, which has driven a lot more interest in the actual stock. As a result, Snowflake has taken advantage of this situation and raised their IPO price to the $100 to $110 range, representing a 30% increase from what the valuation was just 2 weeks ago. This shows you just how hot the cloud and IPO market is right now, and this is something to make note of, because if you are planning to invest, you really have to ask yourself the question, is investing at a $100 price point here justified? Does it actually make sense? Obviously, it's not as good as a $75 valuation that we just saw a couple weeks ago. So is it worth paying a premium of 30% just because the other two large giants are investing in this company as well? In my opinion, that is a very lofty premium to pay, but let's first look at their financials to see if they can actually justify this 30% bump, or even the initial price that they wanted to go public at based on their revenues and their income and all that stuff. Looking at the financials, for 2019, they pulled in $264 million in revenue, but they spent over $500 million in expenses, mainly for advertising and marketing, so they ended the year with losses of $350 million, like I mentioned earlier. However, that being said, this is very common for cloud-based stocks. They have massive revenue growth, but it's highly driven by their marketing spending, so they technically, yes, are losing money at the end of the day, but if they needed to go into survival mode, they could just theoretically shut off those expenses and pull in a profit, and that's what makes a company like this so exciting for the future. They're heavily focused on growth, and as we saw from their revenue growth quarter over quarter, it's something that investors are demanding in this market. But that being said, with $264 million revenue and an initial IPO valuation of $21 billion market cap, which is around $80 per share, that puts the company at a price to sales ratio of 79.5. So that's pretty rich, but here we've seen a 30% increase in their valuation. So now if we assume a $100 per share price for this stock and around a $28 billion market cap, if my math checks out, that means that this company is sitting at a price to sales of 106. That is rich. Most companies that I personally invest in are around a price to sales of 4, sometimes a little above 4, sometimes a little below 4. There are some exceptions to that. You know, Tesla, for example, is now sitting at 10 or 11, somewhere around there, price to sales ratio, and that's also fairly rich. But to have a price to sales of over 100 for a new public company, I can't justify that. So I'm really hoping that my math is wrong here, but I double checked this and it seems to check out based on what the figures that they've released are. So guys, just remember, if you're buying into this IPO here at $100 per share, or possibly even higher with all the hype around this, you are paying for many, many years of growth, because the company right now is pulling in just about $250 million in revenue, but is demanding almost a $30 billion market cap. So knowing all of this, what would be the best approach here to get some exposure to Snowflake? Well, even if you did your due diligence, you understand this business inside out, you're in this industry, you see the value in Snowflake, you see how much better they are than competitors, everything checks out. The part that still doesn't sit well with me is the valuation of the stock price. It may be an incredible business, but there are many other incredible businesses out there that are trading at much better valuations than Snowflake is. Just remember, there's a lot of hype around this right now. It's going public. There's these big names backing it up. It's pretty much at an optimistic point where everyone wants to get into the stock, flood money in, and that could push prices higher initially when it goes public. However, eventually and most likely, early investors will cash out on this hype, resulting in a pretty significant sell-off like we've seen in many, many IPOs in the past. So I wouldn't really personally invest in Snowflake IPO anywhere near these valuations. However, there's one thing that you could possibly look to do if you want exposure to this company and use kind of a more smart way to invest in them. Well, you know that Salesforce and Berkshire are both backing this company up. They both have a stake in this company. So why not invest in one of those two companies? They're at much more reasonable valuations. They're much more established businesses. They're both very profitable companies. And by investing in them, you're not only getting exposure to what they offer plus the businesses that they own, but you're also getting exposure here to Snowflake indirectly. Although it's a small stake, you're still getting some exposure. Personally, if you want to just stick with the cloud route, Salesforce is probably the better option because it is a cloud-based company and they're probably going to do well over the long term. However, if you want to look more for value, then Berkshire is, in my opinion, the better value option play right now. So either way, I think you can't really go wrong with those two companies, but going directly to Snowflake, that could result in, some pretty significant risk. So if I were to invest in Snowflake, I wanted to get some exposure to Snowflake, I wouldn't invest in the IPO directly. I would most likely go through one of these two companies to gain that exposure. As of right now, the IPO for Snowflake is slated for September 16th, but I will be watching this IPO closely because it is a massive, massive IPO. I believe it's the largest IPO since something like VMware or something for a software company. So there's definitely a lot of eyes on this, definitely a lot of attention both from Wall Street and the investing community here on YouTube. So I will continue coverage on the stock if it's something you guys want. Just remember, not every hype stock ends up working out for the long term. If you're truly investing in this company, which means you've done your research and you want to hold this business for a very long time, I'm talking years, decades possibly, then maybe even with this rich valuation, you could possibly justify buying in. However, if you're looking for just a couple of years to hold this investment and you think you're getting good value, I would challenge you to reevaluate and really look at the fundamentals to see if it is even somewhat justified. Because to me, guys, I just can't justify paying $30 billion for a company that's pulling in $250 million in revenue. Even if it grows to $1 billion in revenue in the next couple of years, that's still a massive premium that you're paying at today's prices. Also remember, if we see a market correction, stocks like this are typically one of the hardest hit, which means you'll probably get a better buying opportunity at that point. However, time in the market is better than timing the market, they say. So if you are really, really interested in the stock, dollar cost averaging in may make sense. However, either way, whatever you decide to do, I challenge you to do your own due diligence here as always, because at the end of the day, it's your money and you got to be responsible for how you deploy it in the stock market. Either way, guys, let me know in the comment section down below on your thoughts on this IPO. Are you on my side here? Do you agree with me saying that this is a very overvalued stock at its IPO price? Or are you in the camp that says those valuations don't really matter? This is a high growth tech, software, cloud stock, and they're valued differently than other stocks. And paying $30 billion for this stock is cheap, all things considered. I'd love to hear your thoughts in the comment section down below, guys. But either way, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.